Hello, hello. Hello. Hello, hello. Let me see if we have everything online.
Hola.
Hola. Hola, Alan. How are you today?
I'm great.
That's awesome.
Yes.
I have in front of my screen, I have the S&P 500 weekly chart. Do you see that?
Yes, I do.
Perfect. Okay, so welcome to your War Room Intense Coaching Session, ICS number 5, correct?
5. Yes.
Correct. Perfect. So far, how do you feel? How are the sessions going? How are you understanding the tools and the methodologies that
Yes.
we use?
Yes. I'm feeling great and always excited to get in on to the next session. You know, every time, every day. I'm
Perfect.
always excited. Yeah.
That's great. Do you see that the methodologies changing or improving the way do you see the market?
Yes.
Okay, excellent. So, well, I was saying on the chat on Telegram that by, in a way, effortless, you're already up 50% on one of the options in Doku. It was just like, well, I
It's
bought it.
actually going down.
No. So it was 50% at some point, right?
Yeah.
Perfect. Yeah. So yeah, we were heading into Wednesday. Thursday, it's earnings. That would be after hours. So it's pay-per-view. We're paying the market to see where it's heading. We had an analysis. We got a sort of a good entry, a good indication. Potentially tomorrow will be if we don't have a new low on the entry. That means that we don't have something that trades below 145.
Yeah.
Probably we're in for a decent earnings report after hours on Thursday. So we just have to wait and see. We're ready the position. We have everything in place. Now let's
I got in at 60 cents. So if it goes down to 30 cents, I'm gonna add some more.
That's on Costco. That's different. That's all the way to next week.
Oh yeah, okay.
That's all the next 2 days week. Doku DOCU is for tomorrow. Now,
oh, that's right.
Yeah, what I want to share with you on regards of Costco, COST, is that looking at the market right now, if you take a look where prices are right now, we're looking at 3,088. The markets today are probably down 1% on the S&P 500. So we take a look at the 20 exponential moving average on the weekly chart. We have a sort of fair support at 3,010. That would be our like ultimate level to think where the market can go in the next probably 8 days before it's
So you're using
reversal.
a 20?
Yeah, now I'm using a 20.
Okay.
Now I'm using a 20. The reason why I'm using a 20 as part of the learning in today's session is to see. We use the 20 as considering like where we as far as like considering is this is something that we have to really be worried about, and we're not there. There's nothing that we have to be worried about. No one's gonna push Santa away. And if we see next week, which is what I'm expecting, if we see next week prices dropping, or might as well happen this week, all the way to 3,000, well, this is something that you already know that was on the table. And these are the levels. Now, we also go to the past to see previous peaks, peak in the price, and we will go all the way back to July of this year. You can see that the level 3,029 for the S&P 500 was a previous high. You have 2 consecutive weeks. Then suddenly again, you have another 2 weeks. We're on the weekly chart, so every bar is a week. So we have 4 points in the last 6 months where 3,020 became a very important level, and you can see that. Of course, after that, you will have 3,010 as massive entry levels, massive liquidity windows for you to once again prepare yourself. I already have 2 more positions that I also will share with you today in advance of the group, so you know how I'm positioning myself, and I'm also crossing my fingers and praying that we have this potential move next week, so we can enter those looking into January. I will be taking Doku and then Costco as probably our last 2 trades for the year for 2019. But we'll be looking to severally, seriously considering being two other positions, looking all the way. There's one position that I'm really thinking, like I'm thinking hard about it. I will also talk to you about it. So, but for the purpose of your training, your coaching is to understand that we're about to exit 2019 with sort of a decent track record, decent returns. We can't complain. And then we'll be positioning ourselves for the first 2 weeks in January 2020. Now, we don't, again, take a look at these. These are the levels that we want to consider. To the downside, the next level, 3,020, 3,010 to enter the market. And once again, we're going to use trend Fibonacci from this push lower. That's the 2855 level. Very important. All the way
so the basis of that is the lowest low.
Correct. The lowest previous low, because you have this low here, but this is the lowest low in this range.
Okay.
You see, just looking at it, let me just remove this. It's not useful anymore. If you see this, see how the price goes up. Okay, you can. See, let me guide you. See this. Okay, and then it goes up, and then. And now what we're expecting, question mark. Which one? Will be the 38.2% Fibonacci? Will it surprise us at the 61.8? I doubt it. I highly doubt it. I would love to see this. I don't think we're there yet. And I will explain why. Because if we remove this, based on this trend Fibonacci, what happens most of the time is that it can go up, can go down to this level. Okay, and then prices will bounce, can easily bounce, and what happened? Stopped again. And then they can go back all the way then again sometime between February to April, and they can revisit the 61.8% Fibonacci, and nothing happened. And then of course you will have the projection that will take the S&P to 3,300, but we're not there yet. That's what we have to see. So what I'm expecting is that once we get to this, and I will show you what I'm expecting here. And this is something that if we are well positioned as we did today, we can actually get some like 100% out of the Costco options and re-enter once again before Thursday, because Thursday next week is the date. Yes, the 12th. That's when the earnings report comes out again. So we can squeeze that option, what is called the zeroed, take the position, make some money, and come back again when the market drops a little bit more next week. That could be a position, because we're not going to say no to 100%.
Right.
We're not going to say no to that. And if it happens before now on Friday, who are we to say no to 100%?
Yeah.
And see what happened with the Netflix. It went up probably to 240. So that's an extra 30-40%. It's not performing as I wanted. I mean, we made 100%, but probably it's not going to get to my Netflix. The Netflix pool.
Oh yeah.
So you see, so it was a good call to get out.
Yeah.
Because the extra is not really worth the time and the risk.
Yeah.
Because there's no really any severe indication that there's something wrong at this point in time with Netflix. Not yet.
Yeah.
So that was a good decision. Now, so we're looking again, once again, we're looking at the levels, potential levels to the downside on the S&P 500 based on the use of the 20 exponential moving average on the weekly. We're using a short-term, remember, short-term moving average to determine the projection to pullbacks, and that's the case. Now, after that, we take the lowest low, the previous lowest low, to indicate the projection from the Fibonacci. It's a trend Fibonacci, so it's very important. I'm going to do it one more time for you to take a look. You take the Fibonacci from that level, and then you project up. Okay? It's trend Fibonacci. You want to go with the trend, okay, in the direction of the trend. And now you have the levels. Your levels to support to the right, 38.2%, that's 3,040. Next level, key level, 61.8. But in the middle of that range, that downside projection, we have this exponential moving average, the 20, and that is what we call confluence. The confluence is the support in two steps. One, It's the Fibonacci, and 2, the exponential moving average. That gives you more credibility to the support, and this is the range where we expect that. Now,
Okay.
why you have to know this and why I share this with everyone in the war room and why I'm training you to see this, because the combination of understanding where is 1, the equity index, and 2, your equity, what position are you trading? Are you trading Netflix? Are you trading Costco? Are you trading Doku? When you understand that, you know how to position yourself to buy at the best price the option. If you fail to master this, you will always find yourself to buying options that won't have the potential to rotate higher, because you're buying high, a very expensive price, and then what happened to the index? It goes down. And that's when you see your option that goes from, you buy a 230 and then it slash, and suddenly next opening is at $1, because you bought when the equity index was about to go lower. You don't need that. You don't need that. You need to avoid that. In order to avoid that, you need to study all this. You always have to pay attention. So every morning you have to understand where is the S&P and what is happening. Your best tools to do that from the technical perspective will be to have a 20 exponential moving average and always know where are the levels for trend Fibonacci. Understood?
Okay. Yes.
Perfect. Now that we have this, what's the point of understanding this? How this translate for you to pick triple-digit profit potentials? It's very easy. I'm going to show you on the spot one case that you probably don't see this one coming. I'm talking about Intel. Ticker symbol, INTC. Now, this is in front of you. I'm going to share this directly on the Telegram, and also will be in the description of this coaching session. Let me put this right away. I want you to write it down. We're looking at Intel. These are the one of the first options that I'm looking into. January 2020. Intel Corporation, January 17, 2020. Strike price, 57.50 call. Now, very important. Everything that we need to look.
Are you sharing something to me?
Yes, thank you. I was about to double check with you. It should be on your screen in 2 seconds.
Yeah, I see it now.
Perfect. Yes. I actually shared this information with you on your Telegram. Now, we're looking at the most important levels as usual. Let's go step by step. Number 1, what is the open interest? Can you read it for me?
38,046.
That means that there's a lot of interest in this option.
That is a lot, yeah.
Absolutely. And therefore, we want to see exactly huge. That's the way to see. Pretty simple. This is a huge number. There's activity here. We want to know why. We want to know how we can participate and what will be the best entry for us to make money. Now, I also take a look at spread. We're looking at a 29 for 130. That means there is 1 cent. There is liquidity.
Yes.
Is liquidity available? We want to see that. And as usual,
I'm getting excited and more.
Wait for it. You're going to get real excited about this one. And finally, we're looking at Jose Ricarte premium concept.
Price rotation.
Price rotation. And we look $8 by 20 cents. If you take your calculator, what is the number you get there? Take that. Price rotation. Take $8 divided by 20 cents. What is the number you get out of that?
$8. I can't find my calculator. Okay, so $8 divided by 23 cents.
20 cents. Round it.
20 cents is 40.
40. That's 4,000% right there. 4,000%. And as I shared with you yesterday, my bad again. I actually have to issue a video apologizing. I thought about Netflix and I knew about Roku and I forgot to look at Roku. From 17 cents open, went all the way to $5. From 17 cents went to $5. That's
Roku.
That was a return of 2,940%. And it was hit and run. Now, of course, this one is a little bit more, it has more because we need to give it time. Why?
Yeah.
And we're going to look into the chart right now, just to establish when is the earnings report and why we have to keep this one, and why we have to make sure that this is one what we're going to buy and we're going to keep. It's for you to decide how you structure this yourself. You probably want to say, oh, if I get it at a good price, I probably buy 2 tranches of 1,000, 1,000, or 2,000, 2,000, and I structure the ladder of exits in how I make money. Because remember, if you buy only one bulk, you're going to suffer of anxiety. You won't be able to manage it. Okay, so we have a lot of interesting information in front of the screen. Pretty simple. What we want to do now is understanding what is taking place. Now, we're looking at, let me remove here we go. Let me just the pencil one more time, remove everything, clear all drawings. The price went down 2.49%. That means it went down $1.43. Look at what happened to the option. It lost 73 cents. We're at 56. You see net?
Yeah.
The net?
Okay. Yep.
Now, this is the price. If we know that the S&P may still rotate lower to 3,010 or 3,020, that means that by next week, this can go down maybe another 2%. And this option then can be somewhere in the range of 60 to 80 cents.
Woo.
Okay?
Yeah.
At a 60 or 80 cents, this is a bargain. I started watching this when it was $2 and something, okay? And we have until January 2020 for this to make a move to 57.50, which is not a big deal. It's not a big deal.
Yeah.
So what's the kicker as well? Well, the kicker comes in the form of insiders plus positive yield today plus buying strength. There are multiple reasons, 1, 2, 3 reasons that on the table are allowing me to see that we can make a play here. But as usual, because I know that there's still some room to go lower, I'm not buying yet.
Based on the
price rotation of the S&P 500.
Yeah, S&P 500. Yeah.
Correct. And what we're going to do now, I'm going to go show you directly.
So the contract high and the contract low data is coming from the S&P 500, right?
Yes, because it's rotating. Remember, right now there's no news on Intel. The equity itself is just sort of a parallel effect of what the index is doing. If the index is doing good, of course, people feel more enthusiastic about buying Intel. But it's not really any catalyst there. Now, there's one catalyst. I'm going to quickly remove the notes. We're going to look at the factor. Let's factor in the insiders. And as usual, we're going to use our tool, free tool for excellence. It's Open Insider. We also know about Guru Focus. We'll talk about it tomorrow. Now, here I'm just going to go directly, and I want to figure where are the insiders in this company. Make sure I get all of them. I'm going to do search, and I'm looking in this search. I'm using directly INTC. Now,
wow, there's only 2.
But look at the
there's
money.
Only 1. Yeah.
There's only 1, but look at the value.
Right. It's amazing because you checked all of them, and then you selected the last 1 month, and only 1 name popped up.
Yeah, because I'm right now what I'm doing a laser focus search.
Yeah.
I'm focused on the tickers here. You can see there. Do you see there?
Yeah.
I'm focused on INTC, and I want to know exactly if there's any activity in the last month, but I can actually look into the last 6 months to find if there's any activity and see what is happening. Now, you see, in the last month, in the last 4 weeks, we have only 1 director, but this gentleman is adding first. On November 15, he added $5 million worth of stock of Intel. That's a lot of money. Do you see anything to the left?
Yes.
Do you see any?
No.
Nothing.
No.
This gentleman, James J. Goetz, it's risking real skin in the game, $5 million. And guess what he did after that? By the 20th, 5 days later.
Another $5 million.
He must be rich. Right there. Now, very important to follow up. Entry price, 58.13, 58.24. Now, before that, CEO on August here, CEO Robert Holmes Swan, he bought almost $500,000. He's risking money at 45.70. He's still up. And then we also have CFO, the money guy, George S. Davis, adding another almost $250,000 at 45.70. So they're up. And now here's the big play. Big play, $10 million. He did that in November. Why? Well, there's a reason why he did that. I'm going to go to Trading View on the chart tool. Remember, you can always use the free. I use the paid pro because I work with the volume profile. So I'm INTC. Okay, look at this.
So how much is Intel trading now?
Intel is $56 and change.
56. Okay.
Yeah,
so that
58.
inside bought it at 58.
Yeah, so we have a slight advantage over here. Him.
We got time. Yeah.
Yeah, we got time. That's right, $56.03. Now I'm gonna go into understanding when is and the next earning report is on January 27. Very important to understand. The call option that I'm looking at is January 17. Okay, very important. So we're looking at move before that. And if we look at that, just a few other ideas to look up to this, because Intel is part of the war room tactical portfolio. So now let's take a look at the weekly chart, because I think it's very important and it's evident that we're looking here. Look at this on the right now. We have the 20 exponential moving average, and we're looking at a strong support of 53. Okay, see this weekly. We know that prices are retracing from the entry from the insider, and we have this position now. We see the volume. We have some congestion. Really, Intel is a very solid company. Right now, it's like a white elephant. They do well. They know what they're doing, and they go steady. It's not one stock that you will see massive, crazy moves unless the market itself just moving crazy. But it's not the case. So now look at this. You see this pullback here? Do you see that? Is that a yes?
Yeah.
You see it? Okay,
yes,
perfect.
Yes.
And now we're going to project trend Fibonacci. Where do we have the 38.2% retracement? At 54.98, right here. By coincidence, which is not a coincidence, such thing does not exist. You see the volume here. The volume is steady, very steady volume. And here. So we can expect, if the market continues dropping, the S&P 500 all the way to what we have so far, 310, 320, this moves to this level. And the question is, where do you think we'll see this option? Probably at 60 cents.
Yeah.
Why not 40? And that right there will be an amazing entry for us all the way into the new year, 2020. Okay?
Right.
So
you use the weekly, not the monthly.
In this case, I'm using the weekly. I'm using the weekly because I'm expecting this to be the support right here. In a conjunction between the trend Fibonacci level, 38.2%, and also the exponential moving average. There's some volume accumulated here that we can see. So this can be of tremendous value for us. But the most important is that I'm using all this to time my entry on the call.
Yeah.
That's what I want. I want to make sure I use all that information to time. And if I can get this option for 60 cents, 40 cents, it would be a big win for us. And this is what I'm looking. Yeah. And I think we're looking to get into this one by Tuesday next week. That's where I will see the, yes. And I will get, so far, is everything clear?
I thought January.
No, but January is the earning season.
Oh, okay.
Yeah, by January 27 is when they will be reporting. You see next earning, January 27.
Yeah. Okay.
But it's a combination of factors: recovery, an expected Santa Claus rally, and getting a very good price in this company. That's what we're looking at. Okay, perfect. Okay. So that's one. The other one, and this one is to close with another comment. It's something that I'm attracted to it, and you really have to consider what I'm going to do to this one. I'm going to talk about Uber now. It's not unchanged. We're looking at always the same values. Let's look at the values real quick. I'm going to get out of this one. I'm going to put also this one on your Telegram right away, and will be in the description of this video. What I'm considering Uber, because we have the CEO adding a interesting piece of cluster, we have the new CEO, Dara Koroshtashi. I don't know how to pronounce that name. She bought, look at this, 250 shares. It's an increase of 20%, okay?
Mm-hmm.
And the worth, it's an investment of $6.6 million.
That's huge.
At 26.75 cents. Where's Uber right now? 28.98.
28.98.
Yeah, your position, what you think about this company is really like, doesn't matter. But what we have to think is, if by next week, because this is, we're talking about the 20, but next week we're looking at December 5th, all the way is December 12th. So we have one more week. If next week is the last push lower for the S&P 500, and we already are at this level, it means that there's a consolidation in the stock. And that, understanding also that we're looking at the December 2019, 30. So we have about 2 weeks for this to take some place. But we're looking at this. Look at the price rotation. I want you to focus on the price rotation. This is $14 by 20 cents.
14.
Yeah. $14 by 20 cents.
That's 7,000%.
That is correct. That is correct. And Uber is a company that, going into understanding that our key catalyst is always going to be, number one, ideally, is to find the insider. We already have this huge position at $26 estimated. There's no more reason for Uber to just crash. Right now, it's not on the headlines. So one of the things that I like to find, and I think you noticed that most of these calls where we have had tremendous success, is based on we're trading things that no one is talking about. Unless, of course, we're going to the earnings season, but not really the media is not really focused. They're not directing their attention to those. So it's that attention. So if I look at the open interest, I'm looking at 29,000, almost 30,000. The spread, the difference between the bid and the ask is only 10 cents. Always something that you have to look at, because if they're like 50 cents here, I mean, it's not impossible, but it's huge. So we have to pay attention. And of course,
10 cents is already huge. Right?
Yeah. And I know that potentially, if the S&P is still moving to these levels, and I am skilled enough to buy this when this is here, then the price, then the market will potentially has all the energy to move higher, and this will just start unfolding.
Skyrocket.
Yes. So I have to think about this. We have to think about this over the weekend. Yes, an anticipation of the market rotating higher. You already have the position of the insider, the CEO.
That would be 7,000%.
In my thesis is that we can probably scratch 700. That's my thesis. But sometimes I fall, a little bit too low, like 200, 300%. It all depends how it works. But for us to get to this level, what I consider is that we need to liquidate the position on the 19. That's how we have to push it. So sometime next week, we can go in. I mean, if we see 30 cents here, this is a no-brainer at all. It's a no-brainer. We go in and then we hold that position. And then we start.
Liquidate on the 19th of December?
Correct. Because remember, the expiration.
Before the expiration date.
Exactly.
Yeah.
And we have to hold a little bit to see how far we can push it. And I mean, Uber has no reason not to hit the target. Now, of course, we have to play smart. We have to play smart, understand that things can actually, just may not happen. We don't know.
Yeah.
We're just adding all the evidence to say, okay, I want to take this. We're looking to make an educated decision. Mm-hmm. So I have to think about this over the weekend. I have to see how this one behaves Friday, Tuesday. But definitely, I will be tracking. If I see this at 30, we go for it. We're gonna take it. We're gonna take it.
Yeah.
But you see, these are the kind of things that I'm always cooking, building up, slowly cooking in anticipation how we can position ourselves. And this is something that you have to look. You are directed by the insiders, and you look at that information. Always remember your duty for yourself, for your well-being as a trader and investor, is to take the information from the insiders and see how you can twist that, and make triple-digit wins.
Yes.
That's what it is. Yes,
Yes.
it's great. You can buy, I mean, you can have all plans. I always say, I grew with Jewish and Muslims, Arabs, and they have everything. They have a job. People get confused. They do work. They're not just rich by an accident. They work. They have real estate. They have businesses. And then they come up with markets.
Markets, yeah.
But retail traders, most of the retail traders, they just want to go markets. They don't have a house. They don't have anything. You have to build security. I want that security for you to be
leverage.
Exactly. They're leveraging themselves. They're not concerned that the money that is coming from the stock market trading or investing is going to pay the mortgage. Yeah, that is nice. But you get there on a certain point in your life. We're in the last 10 minutes. I want to make sure that we grasp this concept. So I want you to leverage the fact that you know where are the insiders. You have the tools. You know how to use the tools to know where is the big money in. And now knowing that, you know where is the key level that is going to hold your position. And knowing that, then you have to go and find a Nasdaq. It's one of the tools, which I put on the description of your previous session. You know where to find the light. You know where to find. You want to find where's the action, the open interest. You want to find that one that has the tightest spread. That's what you're looking for.
Yeah.
You also want to understand the price rotation, not because I'm not going to say no to 4,000%, but also you need to understand that how far you can go with that.
Yeah.
And when you know that, you will never be scared again. Money will never be an issue in your life. It's true. I mean, it's like you develop these skills and you will like, how much money you made last year? Oh, well, I made 10%. Good for you. That's what we make by lunch. You will be like, that's what we make by lunch. It's like, it's and then when you hear all these hedge fund managers and mutual fund managers, especially U.S. mutual fund managers, you will be like, you dummy. You don't know what you're doing.
Yes.
And you don't, I mean, they don't talk about this. I bet you turn on CNBC, even turn on Bloomberg. No one has talked about price rotation for a while, which is extremely important concept to grasp. Okay.
Yes.
So this is information Uber. See that we are discussing. And one final comment, because before we move to the last part, very important last part of this session today that I want to share with you is, I was talking to a prospect. Probably he's going to also do a intense coaching session, and I told him, look, he's a banker. He lost more than so far 650,000 euros in the
He's
markets.
already making money.
Huh?
So he's from Europe?
No, yeah, he's from Spain. He's a banker in Spain, and he said, Jose, I've been around, but I haven't made money. I sent money to a guy in South America, and I lost $150,000. The stories, the sad stories that, I mean, and he said, like, I'm down $650,000. And listen, you're not going to send me any money. Yes, there's a, I will say, sponsorship for these sessions. But the most important thing to understand is you must change your mindset.
Yeah.
If you don't change the mindset, it doesn't matter how good amount is, you will never make it, because you have to take action. It's not me.
Right.
I'm going to pull the trigger. I show you the map. I draw a map, splendid map. Everything makes sense. We have all the information from the insiders. But if you don't go in, if you don't prepare yourself, if you don't improve your skills, if you don't acquire new skills, it's not going to happen. It's pretty simple.
The thing is, my thoughts to that is that him being, he's been around already in the same market, and he's been doing this a lot, and it might be hard for you to train him for what he already knew, and it will be hard for him to change that.
And remember what I said to you the first time before we started?
Yeah.
Bring a notebook and open your mind.
Yeah.
And that for a lot of people is difficult. It's just sometimes even impossible.
Yeah.
So sometimes what happens, a lot of people live they bring the past, and they do something that I call, in a funny way, they're juicing. That means that every day they wake up and they juice what happened yesterday, in the now. And because you live today based on what happened yesterday, you never open yourself to a new you, a new present. You never enjoy it. That's what happens a lot. We'll see. I mean, so the idea is, at the end of the day with this, is understanding what we do, how you're looking at these opportunities. And the moment you see this is just repetition, rinse and repetition, rinse and repetition. That's why I said now, as again, also more experience, don't buy options past 250 because it's not worth it.
Right.
It's simply not worth it. I don't see the point. And sorry, experience and evidence. The more evidence and experience is teaching us that it's the way to go. I mean, what we have seen recently is not an accident. The success and way before this, way before you joined the war room, we were already hitting like home runs, 100% and 200%, 300%. So it was not a new thing, and that's what it is. Now, at this point, I want to share with you another link that we'll include in the description of the video. This is very important for you to understand. This is the concept of managing portfolios. This is something I used to do because I used before turning 30, I'm 37 already, almost 40. I used to manage $500,000 to $1 million portfolios. The idea is a little bit different, and actually that's easy. Managing big money is easy because nowadays in the US, what they're doing, I was actually talking to a guy in Spain, is passive trading, passive indexation. And everyone is happy. And so far, it has been working very good for passive ETFs. And it's a way to see things.
Yeah.
But I don't still think that's the formula for someone that has $25,000 or $50,000. I'm not sure 100% that's the formula you're looking at to have a comfortable retirement or to have a full life. This information that you see in front is what they call the CAGR of the stock market, which is a composition of understanding compound annual growth rate based on adjusted for inflation and include dividends. This is something that you can use to measure, in a way, my performance and your performance. But it gives you a benchmark of reality of what it is and what it's not. So, for example, if you take the last January 2000 to December 31st, 2018. You adjust for inflation, you calculate this as the S&P 500 returns, and you do this, you will see that every dollar you invested will grow to $64, 64%, okay? So this is what we have to use as a benchmark, understanding that either you allocate your dollar on the S&P and you go to bed and sleep, or you allocate your dollar and follow what we do in the war room. So far, I'm pretty sure that what we do in the war room beats this by a lot, a lot. Always the question would be also another variable to understand would be to measure the risk, but we'll see that later because the risk so far has been tame, but we need to come up. I have to share a few ideas on risk as well. And you see that the average return has been 4.1%. And then you see that the annualized return has been 2.64%. This is in a period. But then again, here's the funny thing. And here's why I decided not to talk about the variable of risk right away. This is from January 2000 to December 31st, 2018. That's an 18-year return. The war room as it is 6 months old.
Has it been 6 months?
Yeah, the war room as it is 6 months. The insider report is since 2016. It's different. But you see, it will take you 18 years to take your dollar and make it grow $1.64.
That's not worth of a wait.
That's what you have to think about. That's what you think about. I'm going to share this link with you for you to play with it. And it's always a very important tool that I use when it comes to portfolio management. We're coming to an end. I want to thank you, as usual, for your time. Always be open. This was your session number 5.
Yes.
And we keep growing and learning, okay? I thank you. I wish you a good day. I'm going to prepare this, send it to you in a few minutes. And I see you tomorrow for next session. All right.
Okay. Thank you, Jose.
Thank you.
By the way, can you make the YouTube clear?
Oh yeah, that takes a moment. Let me call you back because this is gonna finish here.
Okay.
Okay.
All
Thank
right.
you so
Okay. Bye
much.
bye.
Bye bye.
Thank you. Bye bye.